Joe Cunningham is the Regional Risk Officer for Visa in Asia Pacific, and it's his responsibility to champion security and maintain the integrity of the payments ecosystem, which makes him the right man to discuss this. So please welcome Joe Cunningham.
How's it going? You're feeling pretty good? Yeah. This is a legitimate Irish accent. I know there was a few people on here earlier today celebrating the result on Sunday, and I just wanted to say it means so much to us because we hold the All Blacks in such high regard. So thank you very much for your gracious performance on Saturday evening in Chicago. Obviously, it means a lot to me personally. I do have a connection to New Zealand myself. When I left Ireland 20 years ago, it was with a young New Zealand woman who wanted to return home after her big OE in London and Dublin. So we moved to Wellington and had a fantastic time there. I guess if it had worked out, two things might have happened. I might have been somewhat conflicted as to who to cheer for on Saturday night, but I wasn't. And I might have by now picked up a very cool New Zealand accent, but I haven't. And in fact, when I go home, people tell me I speak so slow now, I actually sound quite dumb. And but still, when I'm not in Ireland, they say I still talk way too fast, especially when I'm excited. And I'm very excited to be here today. So it's a great pleasure to be here representing Visa. I'm with some of my colleagues, including our country manager, Marty Kerr, whom I'm sure he's well known to many of you. And I'd like to thank Payments New Zealand for the invitation to come and talk. My slides are basically all pictures. So I'm not going to be testing your eyesight with any hard graphics or text. They're really there for me just to sort of as a mental reminder as to what I'm talking about. So I'm going to cover a little bit of ground. I'm just a bit conscious. It's the late afternoon. We're in a windowless room. We've been here all day. And a lot of the sort of themes are coming up again and again and again. So I'm just wary of repeating some of the things. And there's been some wonderful presenters here today. So I don't need to hammer home their messages, right? So I'm going to try and give you a couple of different angles, maybe from where I sit in Visa and what I do, and maybe some observations from what Visa sees as some of the challenges. And I think the tagline is, what are the challenges for new players as they attempt to integrate into the payment system? And indeed, what are the challenges for the existing payment incumbents as new players come along, which I think has been a real topic for today. So we'll try and touch on a couple of those things, but I want to sort of give you two macro themes that I think are important, maybe a little bit quirky, one of them at least, and then some observations. I'll tell you about what Visa's doing just very quickly, and then of course I will talk a bit about security, because obviously that's essential. It is absolutely fundamental to what we do. It is a binary, non-negotiable point. There is no option for failure. You can only pass. So first of all, I wanted to kind of just cast your eye to that image. What does it conjure up? So for me, it conjures up the essence of the Asian countryside, right? You got this image of the farmers and the paddy fields and things. As somebody who's not from Asia, I've spent a little bit of time now living in Singapore. This accent is, by the way, what's left of spending some time here in New Zealand, then Australia, then the US, and now Singapore. So it's a complete mess. I appreciate it, so apologies. But having spent a little bit of time in Singapore, I've done a little bit of history reading about China, especially. And those of you who know your Chinese history will know that from, the early 1940s through to the late 1940s, the Chinese Communist Party, what became known as the Chinese Communist Party, executed a strategy that the Chinese have a phrase for. They say it's the countryside surrounding the city, right? The countryside surrounding the city. That is the strategy that the Chinese Communist Party followed. In the early 1940s, they actually disengaged from the civil war that was happening across the country. They disengaged from the seats of power, the seats of influence, and they basically ceded that ground. And they went to the countryside and gathered support and basically grew scale and leverage from servicing and supporting the needs of farmers, the peasants, and basically people who lived in the surrounding countrysides. And then ultimately, use that as a pendulum force back into the seats of power and the seats of influence, and ultimately prevailed with the creation of the People's Republic of China in 1949. Now, why am I telling you that story? I think if you think about that idea of servicing the needs, the unmet needs of the masses, avoiding the areas where you are possibly doomed to defeat, but ultimately gaining that power and that weight and using it again as a force, is something that some of the examples I give you later might actually conjure up. So hence the image. Another idea sort of that transcends some of the things you've heard today and some of the things that Visa talks about is this concept of unbundling the bank. So, again, many of you in the room would appreciate that we've been bundling things into a bank for the last 50 years, bundling services into a bank for the last 50 years, and banks provide a plethora of service today. But right now we're seeing this shift where financial services are being unbundled from the banks. They're being unbundled from the banks. The outside world, these startup communities, this fintech community, they don't respect our definition of a bank anymore. In fact, they don't see the need for a bank to provide everything, to connect everything. In fact, they see it as an opportunity. And they're going after these segments, the one specific customer problem at a time, wonderfully solving the problem wonderfully, and then moving on. So this idea of unbundling the bank is something that we're seeing again and again and again. An example, well, two simple examples. Peer-to-peer lending platforms are emerging in many markets, servicing the need of consumers, servicing the need of small businesses, servicing the need of people who would not otherwise be eligible for a loan from a financial institution. Lots of other services going after the investment segment, providing very simple investment services to novice investors. So as we think about this idea of disruption and displacement, there's a few themes that have come out, and if you have an opportunity to meet with Marty and the team here in New Zealand or Stephen and his team in Australia, they'll talk about Visa's vision for the future of payments. And some of the ideas we have in there are represented on this slide, where we have concepts of the art of subtraction, or being connected in the time of need, or into the cloud and back again, as we say. So I'm going to pick a couple of these and just give you some examples, and then see if you can see how they fit in with what you're doing and the observations you are making. So the first one is this idea of subtraction. This is Jake Fuentes. He's ex-Visa, typical millennial, creative type, mobile native, API guy. Worked at Visa for a while before he launched his company Level Money in 2013. And Jake had an observation that financial management apps, as they existed at the time, were very, very complicated. They were unnecessarily complicated. They consisted of highly complicated transaction categorization and graphs and tasks and charts, and wonderfully beautiful, but very, very complex. And he actually thought it was very unnecessary and quite tedious. Because for him, the idea of financial management, good financial management, is basically just three numbers. It boils down to just three numbers: your income, your regular expenses, and your savings goal. What is the savings target you have? So he founded Level Money on this idea of taking all the unnecessary clutter and complexity away, and the app provides you, once you've provided it with your income and regular expenses and your goal, it provides you with a very simple single number. It becomes your daily spendable amount, and basically turned the concept of savings into something that's really straightforward, actionable, and therefore attractive to users. Of course, ironically enough, Jake wasn't successful in selling this idea inside Visa, so he had to leave, set up his own business. In 2015 was acquired by Capital One. He now works at Capital One in the US, and Level Money was one of the most downloaded apps in 2015. I think he had something like 800,000 downloads. Now, Jake wasn't the first person and the only person to get this idea of subtraction and taking out complexity. You'll see many, many other examples. So every time you hear the word simplicity here, that's what we're talking about. We're talking about taking away unnecessary complexity and just really identifying and exposing the true essence of what is the customer problem and solving for that. A couple of other examples I'll pick from the investment community that I mentioned earlier. Two very simple examples. This idea of simplifying, sort of the app Simplify Wall Street. Great example where they basically say they take any stock and provide a novice investor 30 pieces of information about that stock. They basically categorize it, but they do it in a very visual way. So they basically visualize 30 characteristics of every stock and provide it to you. In fact, they're so passionate about this whole idea of visualizing complexity that they only hire people who are able to build infographics. Another example is a company called Motive. They have looked at, they basically, for novice investors, they say, what is it you believe in? They don't ask you what type of investor do you want to be or the asset classes you're interested in. They say, what type of investor do you want to be? What do you believe in? So if you believe in the future of virtual reality, if you believe in autonomous cars, if you believe in renewable energy, whatever it is you believe in, that's the theme you choose, and Motive will, using all the institutional data analysis they have available to them, they will provide you a basket of 30 recommended stocks to add to your portfolio. And they'll charge you $10 for that. And that's it. Very, very simple. So taking out complexity and just exposing the simple problems that people are looking to solve for. We have this other idea of how fintechs are also delivering their services at the right time. So it's about using their connectedness and their right time to differentiate themselves. Max Levchin was one of the founders of PayPal. Many of you will know him along with some of the other founders of PayPal. In fact, he was the original CTO. He was the one accredited with solving the early problems at PayPal for online fraud, the massive online fraud that they suffered early back in the ancient internet days. And he subsequently was part of the team that sold PayPal to eBay in 2002. I think it was, if my numbers remember, it was $1.5 billion back then. He obviously made a stack of money, went on to be a very successful independent investor himself in things like Yelp and Pinterest and Stripe and Square. So when someone like Max Levchin launches a firm in 2013, we should probably pay attention. The idea with a firm is, they believe that with publicly available internet data and social media, social networking data, they would be able to build risk models that were as predictive as the proprietary credit scores of FICO and the like. Now, it turns out that they're not, but a firm were able to pivot and still able to use that same data and those models with additional information, like basic information that any consumer would easily provide, would gladly provide, and offer instant credit and pay by installment. So a firm are differentiating themselves at the point of sale, both physical and virtual, by offering instant credit and pay by installments. And again, differentiating themselves by saying, here is the amount that we are willing to lend, here is the repayment cycle, no compound interest, no late fees, totally transparent in what you will ultimately pay back, simple interest only, thank you very much. Again, they've moved on. They have raised something like $425 million from the usual suspects in Silicon Valley, the Andreessen Horowitzes and the like. And again, something that we should pay attention to. The key here is that using the information they have, their connectedness and the timing, they are able to deliver a service to a consumer or a small business, as the case may be, at the time the consumer needs it, not before it, not offering lending on a good day, not before they need it, not after they need it, exactly at the right time. And you'll see other examples of this. You might have seen just in the last couple of weeks, Square's financial results. Square using data that they have access to through their connectedness, transaction history coming through their merchant POS devices. They offer pre-approved loans to their Square merchants. And Square Capital, which is a business that was almost like a tangential business, it was like an afterthought to their original dongle business, is now the real driver of their financial performance. a few other examples. We can speak about China. I'm going to bring up China in a few minutes as another example of a different theme anyway. So let's skip on just in the interest of time. Paytm will be familiar to you for those of you who are across the Indian landscape. Started out, and this is the key, started out in the very unsexy business of mobile top-ups, right? Not a threat to our traditional clients, not a threat to us. Very unsexy business, but solving a problem for a large number of consumers in India. The countryside surrounding the city. Solving a problem for a legitimate problem for a large number of Indian consumers. Then they parlay into e-commerce, and they take what is a regulatory situation in India where every payment transaction requires a second factor authentication in the e-commerce space, right? So every single transaction requires either an internet banking login, a one-time passcode, an SMS, or something of the sort. Paytm solved for that by only having the second factor authentication on the loading of the wallet and not on the payment transactions. So the problem of high decline rates, the problems of dropout transaction with the traditional debit and credit environment in the e-commerce environment in India moved aside, and Paytm now in an incredibly powerful position there. And here's the key. These are traditional cloud players. They started in the cloud, but are now moving down into the face-to-face environment and growing their merchant network. And we're seeing this, of course, in China. I don't need to bore you with large numbers. Every time we talk about China, everyone kind of gets wowed by the numbers. But if you just look at what's happening there, UnionPay on the ground in China grew a very, very successful business. Monopolistic, but a very, very successful business nonetheless. We're seeing Alipay, WeChat now coming from the cloud down onto the ground and competing very aggressively and winning very successfully in that marketplace. And as we all saw, with aspirations to take it outside the Chinese context. Last quick trend, and I'll be just very, very quick on this one, and this is this idea of blurring the lines. So payments, if you haven't already noticed, if any of you are novices to payments, I don't think many of you are, but if you talk to anybody who's new to payments, you'll say, wow, we have a lot of acronyms. All right, I think I didn't count the number of acronyms I saw on the slides earlier today, but there was some observations at lunchtime about the number of acronyms we have. We also have a lot of labels, right? Card not present versus card present, merchant acquirers versus payment processors, mobile point of sale versus fixed line point of sale. I mean, we've lots of labels for things. And what we're noticing is that some of these new players, they pay absolutely no attention to these labels. And in fact, you could argue that what was successful or what worked for us or what was a real strength in the past could actually be limiting us right now. Some of these ideas, some of these labels could actually be not fit for purpose any longer. So we really need to think about that. Simple example here is when Square and Stripe and PayPal offer merchant services, they're not thinking of traditional acquiring and traditional points of sale. They're thinking, how do I make payments acceptance fast and safe and efficient for an individual? They're not thinking about traditional merchant environments whatsoever. And there's an astonishing difference between the 5 minute it takes to set up your account through either your developer and Stripe or through Square, and the 3 to 5 or whatever it is days it takes a traditional acquirer. Now, some people might argue that these players are introducing risk, and in my role, we worry passionately about that. But you could also argue that they're blurring the lines between what they can and cannot do, but they're also bringing in this enormous long tail of merchants who are helping your businesses be successful as well by bringing an enormous amount of previously cash or paper-based transactions that you would never have seen into the electronic payment system today. Square are now one of the top 10 acquirers in the US for Visa, having started just not so long ago. Okay, so there are the few observations I just wanted to share with you. I'm going to just pivot a little bit to talk about API, some of the things that Visa are doing, and then I'm going to talk about security. But before I do that, I want to share with you one of my favorite artifacts from the ancient internet. And I know there was a few up on the board that on the whiteboard that I saw earlier today that I really liked. This is one of my favorites. The key here is it's 2002. So if you're talking about APIs today, if you're new to the idea of APIs and the fact that APIs are going to shape your business and your industry for the next foreseeable future, you're probably right. If you think that your platform strategy is going to be underpinned by exposing services through APIs, you're probably right. The thing is, Jeff Bezos recognized this a decade and a half ago. And I just love by the way, I can't claim if this is the actual letter he sent. This is, again, one of those things that have come through the web. It's probably been whispered around the web and reconfigured multiple times. But the essence of the message is there, and I just love to read it. First of all, he says, hear ye, hear ye. You could almost see him sitting in the sort of city square. Hear ye. From here on, everybody must expose their data and functionality through service interfaces. You must communicate with each other internally in Amazon through these interfaces. There will be no other way to communicate, no backdoors whatsoever. And by the way, I don't care how you do it. Technology agnostic. I don't care how you do it, but you must do it. And here's the real kicker. All of these service interfaces, without exception, must be designed with the external developer in mind. And they must be exposed in the same way externally as they are internally amongst ourselves. Right? Just think of the power of that idea 14 or nearly 15 years ago. And some people say Amazon as the platform, this is probably one of the most key strategic levers that Jeff pulled in the time, 15 years ago, to create that platform and turn Amazon into the giant it is. And of course, Amazon being Amazon, he said, if you don't do it, you'll be fired. And because Jeff is a nice guy, he said, have a nice day. So keep that in the back of your mind, 14 years ago, okay? In Visa, we're obviously thinking along these lines and have been thinking for a while. I remember in my previous role, before I was the head of risk for Asia, for Visa, I was based in San Francisco, I was the global head of technology innovation. So we've been talking about APIs and exposing services for a while, but we've had to be incredibly careful. We have to be incredibly thoughtful in how we talk to our clients about these ideas. And of course, with security at heart, we have to be incredibly careful how we choose to move forward. Now, the API economy, as we say, is not news. It's not new news anymore, okay? And there's a few examples from all around every industry, like we mentioned earlier. Every industry is looking at this. Obviously, we have the big open platforms now, dramatic innovation occurring there, over 4.5 million apps between the Google Store and the App Store. Even in Singapore, someone mentioned Singapore earlier, they're exposing government services through a series of through a service layer. I think there's something like 85 different departments in Singapore now exposing and communicating with themselves and third parties through their API layer. And of course, where would we all be today without Google Maps and Facebook Connect and whatnot? And really importantly, we're seeing it now becoming mainstream for financial institutions, very large financial institutions, some of our competitors, some of our clients. Great example being BBVA, a fairly recent example in India where the NPCI, the National Payments, the operator of the National Payment Switch, exposing their services through what they call the Unified Payment Interface, a series of APIs exposed and available for third parties. And of course, competitors like Braintree, now part of PayPal, and Stripe, as we all know well. And what's Visa doing? So the idea, going back to unbundling the bank, Visa is busy unbundling VisaNet. So one of the core aspects of when we talk about the future of payments, one of the core aspects of our strategy is to take Visa's traditional product set, traditional set of capabilities and services. Sorry, I'm getting ahead of myself there. And we are unbundling those and making those available through the Visa Developer Platform. So if you go to developer.visa.com today, you will find, and you should have a very similar experience that you would if you were any developer going to. This seems to be keen to go on to the next slide. Maybe the next slide is really awesome or something. So the similar idea, documentation, source code, examples, SDKs, all available there. And of course, some of our most popular services are now exposed and free to use by third parties, such as account validator. Someone mentioned identity and verification services we think are absolutely crucial. Risk scores, mobile location services, transaction alerts, transaction controls so that our clients can interface into their mobile banking app to use the power of VisaNet to turn on, turn off specific services of a cardholder's account. So it just keeps going. Developer.visa.com, a really important part of our agenda moving forward. And then just to sort of round out on security, so I have two parts of my job. The head of risk for Visa for the region. First part being thinking about the strategic risks affecting our business and affecting our clients, and any material risks that could materially impair us. We need to think about those and how we are mitigating them. Second part of my role is working with clients and regulators all across the region to think about security and the integrity of the payment system. And those of you in this part of the world will be familiar with a 7-point security plan in Australia from the last number of years, or a 5-point security plan here in New Zealand. I think the argument is that those plans have served their purpose. They got us to a point in time where we now have secure, stable, reliable, predictable payment services in these markets, also underpinning great innovation in these markets and a fantastic customer experience, which has led to Australia and New Zealand leading the world in terms of contactless adoption. What we're trying to do now is shift and think about, well, what's the next? What is the next 5 years? What's the next 3 to 5 years going to bring? And how do we need to change our security roadmap so as to enable this great wave of innovation we're seeing, allow people to openly innovate on top of these platforms that our clients are bringing forward, that VisaNet obviously provides. And some of the essence of that roadmap include these really important pillars, such as the idea of let's eliminate the sensitive data entirely. Okay? If we can eliminate sensitive data from the payment system, we won't be a target for these fraudsters and these organized criminal gangs that operate at scale and who are highly sophisticated and are highly motivated because the data is still valuable. So if you can devalue the data, you lower or shrink the size of the target and make it less attractive. Remove the incentive for it to be stolen to start with. In the physical world, we're all very familiar with EMV. In the digital world, tokenization really underpins that. The other part is, in the cases where you cannot completely eliminate the data, we want, of course, to safeguard it. So again, standards on the back of how everybody who touches, processes, and stores transaction data, we want to encourage them to protect it. Encourage and enforce the protection of that. And then last couple of key points, making sure that everybody feels empowered. Consumers today are more empowered than ever in how they access their payment accounts and how they use it, either in the physical or in the digital world. We have information at our fingertips that allow them to be right at the front line of protecting themselves. So this idea of empowering everyone is a really, really important part of that. And then lastly, we've never before had more data at our fingertips so as to be predictive when we think about fraud. And new standards such as the new 3D Secure protocol and the new products that will be built off the back of that specification, 2017, 2018, incredibly important investments will be made by Visa, by our partners, by vendors, and by our clients so as to shift the focus away from the physical world and to protect and to eliminate the scourge of this e-commerce fraud problem that we have right now as fraud has shifted from counterfeit to online. So just wrapping up on some of those things, happy to take questions if we have some time, although I'm not really. Okay. So thank you very, very much for your time. And once again, thank you very much for listening to an Irishman.
If we do have burning questions, we can take them.
Sure.
I'm just wary of getting our FinTech finalists into the Dragon's Den. Anyone? Questions? That's been the theme of the day. Thank you very much,
Thank you very much.
Cunningham, and also to our Gold Plus sponsor, Visa.